$82,000 up in the public count here today. Another new all-time high for the public count. Absolutely on a roll. Congratulations to everyone watching this that has hit all-time highs in your portfolio here recently. There's been so much money to be made in this market over the last 2 years. It's been absolutely unbelievable. Unbelievable, and a day like today really shows, right? Absolutely incredible. In this video here today, I'm going to tell you what stocks I spent $33,000 on and why. One of these stocks might shock you. Some of these stocks may say, okay, I can see Jeremy buying that one. One of these stocks I think is going to shock you guys. You're going to be like, wow, he really went out on a limb and bought that one, right? And so we're going to go through all that in this video here today, and I want to explain the upside here. And I'm also going to give you guys a different frame of thought in regards to some of these stocks that I've spoken about in the past, because I feel like I talk a lot just about the raw numbers in regards to these stocks. We'll get into a little bit of the numbers in regards to stocks, but I just want to give you a different frame of thought so you really understand why these stocks have so much upside over the next many years, okay? It's one thing only I need from you guys. I appreciate y'all joining me, and that's to smash that thumbs up button. Hit that like button. If you want to subscribe to the channel, if you're not subscribed here, you might want to go ahead and do so. We are now, oh gosh, I don't even know how many subscribers, but I know it's an all-time high. It might be 766,000 or something like that. So appreciate y'all being here. Additionally, if you want to see the stocks I'm buying and selling each week in my Patreon portfolio, I'll put that as the main pinned comment down there here today. You also get access to my Patreon's Discord chat. So if you're somebody watching this and you're in your first year of investing, I think that's a really good thing to join, not just to support my content, but to literally get to see the stocks I'm buying. So you see exactly how I build out a portfolio. And in that particular account, it's only like a $30,000 account right now. So it's kind of relatively smallish, right? So you get to see exactly what I'm buying and selling each week and exactly how I build up a small money portfolio, right? So I think that's really valuable to anybody watching this that you're in your first year of investing. If you're a little more experienced, then you're going to want to apply to join Private Stock Group. That'll be the second pinned comment down there. Access to all my best course curriculums, access to my exclusive Discord chat with not only myself, but the 6, 7, and 8-figure members, right? And access to 1000xstocks.com, all that good stuff, okay? Alrighty, guys, the first one of these 5 stocks I bought here today is a relatively new buy, a very new buy for me, and that is AMD. Yeah, I just started buying the stock really in the past week or so. AMD's just gotten to a very attractive valuation, and I have to start a position here because there's major upside over this next few years, in my opinion, in regards to AMD stock. I bought another 50 shares here today in my Ally account. Ally account, it's a smaller portfolio I have, and that's where I bought all these stocks at here today. My Ally portfolio is probably less than $300,000, so I just have some money over there, and that's what I thought, you know, let's go ahead and make some buys here today, $33,000 worth buys. So yeah, AMD was the first one, 50 shares, 138 I paid for those. This was about a $7,000 move in regards to AMD. Now, I want to give you a different frame of thought in regards to AMD, because I know I spoke about AMD a couple times in the last, let's say, week or so since I started buying the stock. But I want to give you a different frame of mind. I want to actually pin it against the big dog, NVIDIA, the most respected company in the space, right? And, you know, NVIDIA stock, I've obviously made tremendous amount of money on this over this past year, right? I'm completely out of my NVIDIA position now at this point in time, but there's a reason I'm buying AMD over NVIDIA right now, because I believe AMD's return profile over the next several years is going to be far outpacing NVIDIA, and I don't even think it's going to be relatively close. And here's why. When you look at AMD's forward P, you look at NVIDIA's forward P. AMD is actually significantly below NVIDIA's forward P. Now, additionally, AMD is also significantly below the 2-year forward P as well. Now, keep in mind, I think NVIDIA and AMD will likely beat numbers next year, so both of their forward Ps and 2-year forward Ps are likely lower than what they're showing there on 1000X here, right? Because they're probably going to beat analyst expectations. But you got AMD trading lower than NVIDIA. Now, here's the situation. Trailing 12-month earnings per share growth is faster for AMD than NVIDIA. The current year expected earnings per share growth faster, and next year AMD should significantly outgrow NVIDIA when it comes to earnings per share growth. And I think that's going to be for at least the next 3 years. So I'm talking 2025, 2026, and 2027. I believe AMD is going to far outgrow NVIDIA when it comes to earnings per share growth, and I don't even think it's going to be close. 5 years out, 10 years out, that's a much bigger prediction, right? And I think that's a much harder prediction. But I can really see out over this next 3 years how AMD is going to far outstrip NVIDIA when it comes to that. Now, here's another frame of thought to think about, right? This is from the Q4 2022 bottom, right? Since that time, NVIDIA stock is up 1,100%, AMD is up 140%. NVIDIA 100% deserves the move it's made here. Some people call that a bubble. Not if you look at the numbers. Sure, if their whole business model crashes, then you're going to say it was a bubble, right? But as long as their business model keeps executing, they don't even have to grow nearly what they've been growing. They deserve that 1,100% premium, right? But AMD is only up 147% from that bottom, right? I think there's going to be a lot of catch-up to be played in 2025, 2026, and into 2027 when it comes to AMD stock versus NVIDIA. And I'm not necessarily thinking that NVIDIA is going to crash, and it's like, oh my gosh, NVIDIA is like down 50% or something crazy, right? I just believe AMD's upside is going to be significantly more as they play catch-up, especially in regards to the data center AI space there. Now, 2024 performance is what we're looking at here, right? This was another year of NVIDIA. 2023 was a year of NVIDIA. 2023 was a year of NVIDIA. 2024 is a year of NVIDIA, right? And I believe 2025 and 2026 are going to be the years of AMD. Like I said, not like it's impossible to make money on NVIDIA stock over the next few years, but I just believe I would look at it the same as you looked at the last 2 years in regards to NVIDIA versus AMD. Last 2 years, it's like, could you have made money in AMD? Sure, there was some money to be made. But where was the huge money to be made? It was to be made in NVIDIA, right? NVIDIA got out there first. They got their AI chips in the market first. They beat AMD to the punch. AMD, lagging in regards to that, right? Now it's catch-up time. And so I believe the big money is going to be made in AMD stock over this next couple of years versus NVIDIA. Because you're going to have the embedded growth. You're going to have the gaming get back to growth, in my opinion, in 25, 26, right? You're going to have data center growth rates far outstrip the data center growth rates in regards to NVIDIA, right? Absolute number could be bigger for NVIDIA. Growth rate number should be much more extreme when it comes to AMD overall. And so overall, I think you're going to see 25, 26 really be the years of AMD versus the years of NVIDIA, right? And once again, that's not saying there's not money to be made there. Now, I believe, so you may say, next question might be, why not a position in the public account? I'm probably starting a position in the public account with AMD likely this coming week. High probability. When I say high probability, I'm like 90% probability I start a position in AMD stock this upcoming week in the public account. And there's 7 stocks I hold in there that have gained me more than 100%. Amazon's now over a double up. Woohoo! 103% on Amazon. 125% for SoFi, 190% gain for Revolve, 426% for Meta, 916% for Palantir, 1,817% for Elf on a shelf, and then 2,700% for Tesla. When I look at AMD, I believe AMD will likely, when I start adding that position, I believe that will grow to become my 8th position in the public count that will end up with a 100% plus gain on it, and likely several 100% a gain. And it's not like I'm just like, oh, I think it's going to go up a lot because, it's a really good company and Lisa Su's leading it. No. I'll show you the numbers right now. I'll show you the numbers. And you'll begin to see, AMD's got so much upside. And these numbers aren't crazy. I'm about to take you through and you'll realize, oh my gosh, AMD's likely a 2x, 3x, 4x, maybe even 5x opportunity just over the next few years here, right? By the way, if you're wondering, do I think PayPal is going to get to that 100% level? I do believe that. It's, PayPal's just a slow, steady mover up. That's the thing. Like PayPal, we've made $85,000 on it in the public account. I understand it's not the biggest amount, but it's $85,000 is $85,000. So that's a slow, steady mover. I wouldn't be surprised if PayPal eventually is a 100% plus stock. So let me show you some numbers in regards to AMD, and you'll begin to understand why this stock has so much upside ahead. What I'm showing you right now is on 1000xstocks.com. This is our projection tab, and this is me running numbers here. So I think it's pretty dang realistic that AMD will grow at about a 30% clip per year on average 2025 to 2028 when it comes to revenue, right? I don't think that's crazy at all. You could run some assumptions that AMD might go to 40 or 50 or 60% revenue growth over the next few years. I'm not going to run with that assumption, right? Especially when you count in the ZT Systems acquisition there and the other acquisition they did recently. I mean, there could be much bigger revenue upside than what I have here is 30%. But I ran 30%, right? Net income growth is going to be pretty extreme for the company next year because they're kind of getting their profitability back. And so they likely should get their net income margins back in the 20s again, which isn't that crazy high. Like NVIDIA's running net margins recently of like 50%. It's ridiculous. So we're not even talking about in the same league as NVIDIA. Just getting back to the 20s in 2025, right? So, if you're growing at those sorts of rates, even if you assume there's going to be a major slowdown after that, 50 to 70p is pretty fair. So that puts the stock next year in 2025 likely between 270 and 370. So you got to understand there's a potential here that AMD stock doubles next year. Next year, okay? I'm not banking on that. Otherwise, I'm not playing any call options on the stock or anything like that. But I'm just saying, there's a realistic potential this stock doubles next year. 2026. From there, basically, I've been growing 30% top line per year, 35% bottom line per year, right? Getting those net margins to 27%, 28%, and then 29% in 2028. Now, a 40 to 60p is very fair for a company that's growing 30% top line, 35% bottom line. You might even say that's low, but they're a hardware-related company, right? So if people want to put them more in the hardware space, it's fine. So you're just going to command a lower P than, let's say, if it was a SaaS company. Because a SaaS company growing 30% top line, 35% bottom line, they might command more to an 80 to 100 PE on that stock, right? So then we have the stock trading 292 to, let's say, 400, low 400 range in 2026. We have the stock trading somewhere between about $400 and about $600 in 2027. And then 2028, somewhere between $500 and $800 in 2028, right? This, folks, is why AMD's a pretty interesting opportunity. Because once again, these numbers aren't pie in the sky, crazy. They're never going to be able to hit that. These are doable numbers for an AMD, and you've got to understand that. But let me take it down a step. Let me go more bearish on AMD. Because I think that's important. You can't just run one scenario whenever you do a stock. Whenever I run full valuations on a stock, I run an ultra bullish case, a bull case, a base case, a bear case, and an ultra bear case, okay? So let me show you a little bit more of a muted case here. This one basically has them doing 25% revenue growth on average. You want to talk about, like, if AMD doesn't average 25% revenue growth from 2025 to 2028, given the opportunity in front of this company, I'll actually say Lisa Su failed. She never fails. Like, Lisa Su's a beast. She's like one of the best CEOs you've ever seen in the history of the public markets, and certainly of the past 10 years in the market. Top 5. Put her on the Mount Rushmore of CEOs the last 10 years, right? So if she doesn't grow this company at least a 25% clip per year, she failed. So keep that in mind. So 25% very doable here for this company. 150% net income growth. Once again, next year is going to be a big net income up year for the company, right? Get them to about $7.2 billion in net income. And then I have them doing 30% net income growth per year, a little outstripping the revenue, right? So, 35 to 45 PE ratio is pretty fair for this company longer term here, right? If they're growing at 25% top line, 30% bottom line, and they're viewed as a hardware company, just a chip company, right? So it puts the stock somewhere between about $347 and about $446 come 2028, which gives me a compound annual growth rate of 26% on the low end and 34% on the high end, folks. So, yeah, that's pretty darn attractive. That's pretty darn attractive here in regards to AMD. So, moral of the story is AMD's a buy. I honestly should, I might make a video in the next month, like buy AMD stock and don't stop buying. It honestly, the valuation is at such a compelling place with the likely growth rates of this company over the next few years that I'm like, it might justify doing a video like that. Alrighty, next stock up here that I bought here today, second stock. This one is interesting. It's Elf on a Shelf. I bought over $10,000 of Elf here today. $138 I paid for those shares, 75 shares I bought total. Now, in that particular portfolio in my Ally account, that puts me at a $55,000 position, which so far we're up about 22% on that one. So, this is still just kind of early on here. Now, this is a hard stock to buy psychologically. And I thought it was worth mentioning this because, once again, I'm trying to give you some different ways of framing these stocks and kind of thinking about them. But this is a hard stock for me to buy. I'm up 1,800% on it. 1,800%. It's very difficult for somebody like myself to buy a stock that I'm up that much on, right? But let me give you a different kind of frame of thought in regards to this. So let's say you bought Amazon, it's 2001, 2002, you bought Amazon stock and you held it over the next decade, right? You made about 3,000% on Amazon stock. Now, you could have looked at Amazon stock and you could say, I'm up 3,000% on this stock. There's no way I should buy more of the stock because I'm up so much. I've made so much money on Amazon. Doesn't make sense to buy more, right? Should not buy more of the stock. In reality, there was a poor decision. Just because you're up a lot on a stock should not dictate whether you're buying or selling a stock. That's not the way the stock market works and not the way valuations work. Because here's what you missed out on. You should have kept buying Amazon stock because since then, Amazon's gone up another 2,000% since 2012, right? Another 2,000% gain. So you can say, I'm up big, I shouldn't buy. No, you should have kept buying Amazon stock. Just because you made a lot on a stock doesn't mean you stop buying it. Same way you would view it as, like, just because the stock's gone up a lot, you wouldn't view it as, like, it's a for sure sell or something like that, right? So, You should have kept buying. The way you got to look at stocks is the numbers and the valuation. That's all that matters. The numbers and the valuation. What you're up or down the stock means nothing. If Amazon was poorly executed and their business model is crap, it didn't make sense to keep buying Amazon. You should have sold out of the stock, right? But the company which just kept executing on a high level, which means you should have kept buying the stock. You looked at the numbers, you looked at the valuation, you said the revenue likely over the next 5 years is going to X number, the net income over the next 5 years is likely going to X number. I need to keep adding Amazon stock, right? That's the way you got to look at this overall. So when I look at ELF, here are some numbers I have that I believe these are kind of realistic numbers for ELF. So next year, I have been growing the revenue 25% and net income about 100% next year. Net income is going to be back on track next year. Big cost year for the company. They've had a lot of costs to the business model. I do not expect that to continue in terms of ramping up a cost. I think that's going to moderate substantially in 2025 and 2026, which means their net income is going to fly over this next few years, in my personal opinion. Okay, so the net income margins have so much expansion here. Like, this is a company that net income margins will probably get to 20+% by the end of this decade. So basically, 40 to 60 P is likely fair for 2025. It puts the stock somewhere between about 137 and 206, right? So I don't think there's necessarily a ton of money to be made in the short term in ELF, unless they report another banger quarter at the beginning of this year, which, then we're going back to 200 likely in 2025. That's what I'll say about that. Now, 2026, 20% top line growth, 40% bottom line, 35 to 55 P is fair for a cosmetics company. This is almost like a SaaS company. I mean, these companies, somebody runs out of the product, they go buy more, right? It's cosmetics, it's beauty, like that. You don't just stop wearing makeup. You don't just stop doing skincare. Like, that's not how it works, right? So basically 35 to 55 P, I think, is pretty fair for this company, given those sorts of growth rates. Puts the stock 168 to 264 in 2026. 2027, 235 to 370 in 2028. That puts the stock somewhere between $329 and $518, which is giving me a compound annual growth rate of 24% on the low end and about 39% on the high end. So whenever I could look at a stock and I run what I believe is a realistic scenario for them, and I can get a CAGR on the low end of 20% plus, it's very attractive. Not only that, when I look at ELF, it's a company that's they've executed far better than I ever anticipated to them. They get bonus points for that, right? Additionally, balance sheet's in a great place. They get bonus points for that. Additionally, they've got a top tier CEO. I mean, who's better than Terang in the last 5 years? They get bonus points for that. And additionally, their products are great, whether it's a high inflationary environment, deflationary environment, recession, it doesn't matter. ELF sells because they got great products at very low price points and they're needs based. So therefore, they get bonus points for that. So when I can run a what I feel like is a conservative case, and I get a CAGR over 20% on the low end, dude, I can't not buy this stock. Like, as I could be up 10,000% on the stock, and it's still a buy. At the end of the day, all that matters is the numbers and the valuation. And when you run your projections over the next few years, if you believe it's a very attractive compound annual growth rate you're going to get, you got to take that opportunity. So I got to take that opportunity. If ELF's business model ever completely falls apart, the story changes, right? But we have no signs of that. The company just puts up great growth and great growth. I mean, look at this. This is our charts feature on 1000X. We got a bunch of different charts on there, and this is just looking at the revenue chart. This is on a trailing 12-month basis, right? Now, analysts might be bearish. They might be wrong on this. It might continue to go like that. That's probably what's going to happen, right? But this is truly a top-tier company. When you can see on a trailing 12-month basis, a revenue just boop, 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 just a stair step up, that's unbelievable. And this is a stock I featured on I have a series I've done on the channel this year, which is called Buy This Stock and Don't Stop. And the series has been on fire. Shopify, I believe, has 2x since I put out that video. Palantir today, since I put out that video, Palantir is now like $75 versus it was $20 when I did that video. Tesla was $180 when I did that video. Tesla today, I think, is $370 or somewhere around there. Nike stock, jury's still out on that one, right? It was 75 when I did the video. I think Nike's like 79 today. ELF is one of the videos I did. If you never got to check out that and you want to watch that one, I think it's worth checking out, right? ELF was 101 when I did that. And ELF's like, 130 something now at this point in time. What is ELF? 139. So it's done pretty good. And jury's still out in regards to Celsius. But what a year it's been for that series. Oh my gosh. Next stock I bought here today is Cheesecake Factory. I bought 139 shares of this stock. Another $7,000 worth of stock. Listen, man, I got to be honest with you guys in regards to Cheesecake Factory. I don't see myself stopping to buy this stock. Like, can I be the biggest shareholder of Cheesecake Factory? Like, I would not mind. Like, this stock I look at as such a slam dunk success that I'm just like, give me every share in sight. I might buy this stock nonstop for years. I'm not kidding you. And it's very rare I ever find a stock that I feel like buying for years and years. That's how I feel in regards to cake. Like, I could still be buying the stock next year, the year after, the year after. The valuation is so compelling and the growth story is so compelling with this one, with that dividend. I'm like, why not? Why not? Why not just keep buying this one nonstop for years? Now, in my private stock group's Discord chat, we have, a bunch of different chats, and we have a lot of for individual stocks. And so sometimes these chats are very helpful, not just to talk with other investors about stocks, right, and share opinions and perspectives, but also news-related stuff. So I posted this the other day in there. I said new cake conference on their investor relations page, right? And their conference was really good. Any Cheesecake Factory shareholders, you definitely want to check that out, right? But there was a couple interesting things in regards to Flower Child that were brought up in regards to that particular conference there. I said a couple things that were really interesting regarding Flower Child coming out of that conference. Management mentioned they could end up, they haven't committed to a number yet on how many Flower Child restaurants are going to open up, but they mentioned something along the lines of more than 200. They mentioned it twice on the call, right? So that means the opportunity there for Flower Child could end up being much bigger than North Italia's opportunity. And honestly, it might end up being a bigger opportunity than even Cheesecake Factory. And that's near impossible to wrap your head around, because Cheesecake Factory is one of the most successful restaurant concepts in the history of mankind, right? Flower Child might end up being bigger than cake long term if we look out 10, 15 years from now, right? I said management also mentioned something around Flower Child margins are ahead of Cheesecake Factory, which is amazing to hear. That's insane. If we were to talk about Flower Child margins are going to be ahead of Cheesecake Factory, woo-wee! Like it's insane, right? Like, insane. So this one's just a complete great opportunity, and I've spoke about cake a lot recently, including, I believe it was the first stock I spoke about on 5 Stocks I'm Buying Now, December 2024 edition. So if you didn't get to check out that video yet on the channel, I released that about 4 days ago. Definitely check that one out if you want to hear more about cake and the other stocks I'm buying right now, because my gosh, that was, it's an incredible buy. I might be buying that one for a while. Next stock I bought here is Wynn Resorts. I bought 50 shares of Wynn. That was about a $4,749 move in regards to Wynn. Now, I want to give you a different frame of thought to think about Wynn in, because I think this is very important, because this is a stock that not a lot of people really get. They don't get it. They don't get why I'm so bullish on the stock, why I want to buy so many shares of the stock right now, why it's such an attractive opportunity. So I thought I would give you a little bit of a different frame of thought around about Wynn stock, right? So where we want to start out with this story is, if you look at Wynn's last 5 years of the stock price, it's extremely disappointing. And so a lot of times that can rub investors the wrong way when they're looking at it and they're like, man, this stock sucked for 5 years. Why would I want to buy this stock? And I'm looking at it, I'm like, I don't care if it sucked the last 5 years. I think it's going to do tremendous the next 5 years. Because something you got to think about is, what if Rona never happened? Rona devastated Wynn Resorts' business model, right? For several years. It wasn't like it was just 1 year. No, it was several years, right? It was a once in 100-year health event that hopefully we don't see happen anytime soon for another 100 years, right? They took 3 years of epic losses. Look at 2020. They lost over $2 billion. And they lost a massive amount of money in 2021 and 2022. Keep in mind, if Rona never happened, they would have likely had great profits, big net income in 2020, 2021, 2022, instead of insane losses, which those huge losses hurt the balance sheet substantially, right? They forced the company to have to dilute shareholder value, immense amount of things, right? And so you took the company from being a great profitable company to essentially taking epic losses. Ugly. But that's a thing in the past. But at the end of the day, you've got to think, like, how strong would the company be? So my opinion is, my guess is, the stock likely today would be a minimum of like $180 a share right now. And so basically, I would look at the stock and I would say it would probably be double the price it is right now if Rona never happened, right? And I would not count on Rona happening again, because those freak health events like that, like I said, they happen like once every 100 years. So that's my guess. We would be like a $180 stock today instead of a $90 stock, which would then mean the stock gained would have roughly a 50% gain in the past 5 years, right? Now, 50% in 5 years, some people might look at that and say, oh, it's not that great. Also factor in the massive dividends they would have paid out over the last 5 years, because they would have never had to cut their dividend if Rona would have never happened, right? And they likely would have upped their dividends substantially over the years, which means the dividends you'd be receiving today would be gargantuan. So the return profile would have been way bigger than 50%. It probably would have been I would say 70% to maybe 90% return profile on a 5-year basis, which is pretty darn attractive, in my personal opinion, right? Like, if you could tell me I can make 90% on a stock over 5 years, like, that's a win, right? And especially when you're looking for some of those stable value dividend type stocks to your portfolio. Not every stock has to be the Palantir. Not every stock has to be the SoFi. Those ones come with immense risk, as we've seen, right? And when things go well for them, they really go well. But they also come with substantial risk, right? Now, when it comes to Wynn Resorts, here's another frame of thought I would think about this one with. Enterprise value on this company is around $20 billion roughly, right? Now, if you kind of just take, what would it cost to build these same resorts again, right? The Vegas properties alone, I'm looking at some of these new properties that are being built and the cost of them and what you're getting for them. I don't think you're building Wynn and Encore with the golf course and everything those properties have. I don't think you're doing that in Vegas nowadays for under $10 billion. I don't think there's any chance of that. With how expensive construction is and how high grade materials those properties are made of, no way. No way you're building those two properties for under $10 billion on that land nowadays. Can't happen. As far as the old Macau properties, that's likely $4 billion build nowadays as well. And then Wynn Palace is likely a $6 billion build nowadays. So when I think about it from that frame of thought, basically the way I would think about it, they operate the property in Boston, right? So I'm getting the Boston opportunity for free. The Middle East property they're building out right now, I'm getting that for free. They own some very valuable land that's right across from Wynn and Encore, a great piece of land right on the strip, right across from their properties. I'm getting that for free. So when I think about it from that standpoint, I'm like, that's pretty damn attractive that I could be getting all that basically for free. Because there's no way you're building those same exact properties nowadays for less money than basically what I have there, right? Now, the other frame of thought I would like you guys to think about in regards to Wynn Resorts is rich people always have money. Because there's always worries about recessions, those sorts of things, right? First off, we already seen Wynn go through the worst case scenario. The worst case scenario was a situation where your business is shut down for several years. That's like the worst case scenario, right? Or limited in terms of how many guests you can have. Rich people always have money. So the way I thought about this is I kind of just wrote some numbers around me, right? Now, I have a lot of different stock portfolios, but the public count, let's say the public count was my only stock portfolio, right? That's a $3 million portfolio. Let's say the stock market crashed 50% and that portfolio went down 50%. My $3 million portfolio is now $1.5 million, right? My house, the main house I live in here in Vegas, right? The estimate on it's like 3 point something million. So let's say it's a $3 million house. And let's say Vegas real estate crashes 50%, right? So my $3 million house is now worth $1.5 million. My $1 million second house I have, it's a rental property in Henderson. Let's say that the house that's valued at $1 million right now, let's say we have 50% real estate crash, that's worth $500,000. My $900,000 property in Arizona, let's say that's a real estate investment property I have. Let's say that crashes 50%. Now I'm down to $450,000 of value there. Let's say I have $500,000 in cash, just throwing that number out there, right? Let's say I have that in cash. Well, $500,000 in cash is still $500,000 in cash. So let's say that's all my money I have, right? Even after the crash, I still have $4.5 million of net worth. Rich people still have money, okay? Rich people still have money. It's very important to understand that. Next stock I bought here today is Nike stock. 48 shares of Nike stock I bought. $3,800 worth of those shares. I spoke about Nike so much recently, I honestly don't even feel like speaking about the stock anymore. I talked about it a lot over the last few months. It's just, a very rare opportunity for one of the highest quality companies in the stock market. It was actually literally the stock I led off on the new video I posted about a little over a day ago. I don't know if you guys got to see this one. 6 stocks to buy and hold forever. Nike was literally the first stock I featured of those 6 stocks. So if you didn't get to check out that video and you want to hear more about Nike, check that one out. Very valuable. Now, one last thing I want to leave you guys with is make sure, I think I spoke about this on the Reaction channel recently, make sure you have your financial life in a state where you can buy stocks every week or every 2 weeks. Have more income than expenses, and then you don't have to worry about all the, what if the market goes down crap, all the stock market drama, like what happens if a crash happens. Put yourself out of that. Put yourself in a position where you buy every week. I buy every single week. I'll buy next week, then week after, week after, week after. Send the market wherever you want. I'm going to find great opportunities in the market. I'm going to make money, okay? Appreciate y'all joining me as always. Thanks so much for being here. If you're looking to join my Patreon, see the stocks I'm buying and selling each week, plus get access to that Discord chat, there'll be first pinned comment down there. If you're a level up and you want to join my private stock group, actually, a much higher level, second pinned comment down there. And you can fill out a form to apply to join us in there. Much love and have a great day.